All right, cool. So this is another study hall, obviously. We're gonna look at some charts today and get ready for what's ahead, right? So obviously, first thing we usually do, Forex Factory, right? Um, Today we had a lot of news, and if you were trading today, you would have seen the effect of it, right? We had a lot that affected the euro pairs and USD and obviously GBP too. I don't know why it's not on there because of everything that's going on with the Brexit, right? With the Brexit deal, with the negotiations, they're getting close to a deal. And if you trade any of the GBP pairs, you would see that that actually had an effect today, all right? So we're not gonna go into details. We already know what we got to do. Just click on the details if you want to know more about it, and if you want to look at what did it do, prior to last time that the news came out, you could just click on the date and then just go back to your chart and look at how it reacted to it. All right. So we're not going to be doing a whole lot. Obviously, we're still going to go over the market maker method because that's what everybody is hip to nowadays. You know what I mean? So it's something that's very simple and very profitable if you do it the right way, right? So we're gonna look at some charts. If you guys have any pairs that y'all want me to look at or y'all want us to look at, just put them on the chat and then we'll go from there. All right. Um, so before we get to those charts, I just wanted to look at a couple of pairs um, that um, that I was looking at today. So this morning I was looking at a few pairs just for a setup for trades. All right. So we already know what we look for. Right after the Asian session, that's when we get our setup. Right. So obviously we know that usually we get that bull move, the stop hunt move. So basically to entice sellers or buyers to go in a certain way and then go the opposite way. Right. And then we got to look for those types: type one, type two, and type three. Right. So type one is when it breaks below the Asian range, forms a W, and takes off, or forms an M above the Asian range and takes off. And then we got level two, which is the 50-50 bounce. So basically, bounce off the 50% of the Asian range, gives you an M or W. And then the type three is when it bounces off the first level, right? So I was looking at GU. Um, Not that GU is my favorite pair or anything like that. I was just looking at it, right? And I was waiting on the setup. So we got our vector moves in the morning, like right after the Asian session at 2 o'clock, and it looked like it was forming the first leg of the W. So at this point, what was I doing? I was waiting on the second leg to be formed, and then look at my other confluences, with the EMAs and the TDI and all that good stuff, right? So at first, it formed the first leg, and it went back down. I was waiting on the confirmation to hop on the buy on here, but I didn't get it, and then it went back down again. So at this point, I stopped looking at it because if it was going to make a move, it would have already made it. So I started looking at a different pair. And also another thing that I've noticed is that with the different GBP pairs, it kind of did the same thing too. Um, and another indicator that told me that maybe I won't be getting that set up for G for GBP for the GU is the ADR for the Asian range for the Asian session. It's at 49 pips, which is right on the range. If you are so the best setups usually come out when you get less than 50 pips during the Asian range. Technically, 49 is less than 50, but it's close to the 50 the 50 pip range. So I got to be careful looking at that, right? So if you look at the day prior to that, it was only 32 pips for the Asian range, and as you guys can see, we had a beautiful setup going up and going down, right? So right here we had price bouncing off the 200 EMA, the 50 EMA, and the 800 EMA, and on top of that, the 50 under the 5 and the 13 crossed, and we had a candlestick pattern that we as a confirmation, right? So we I didn't take this trade. I took it coming down though. So potentially could have caught about 100 pips just based on those confirmations, right? And as far as the move coming down, I see that this is the first leg of the M, and then the second leg of the M, right? So right here, obviously this is kind of aggressive to get, to enter from the top because you didn't get your confirmation yet. But technically, you should be entering somewhere around here. Hold on a second. So technically, you should be entering somewhere around here because that's when you got your 5 and the 13 cross, and you already have your candlestick pattern, and you see that there's already momentum going down. Yeah, you would have missed out on this, but you would have caught hella pips either way. And typically, your TP1 should be at the water, which is the 50%, which is the 50 EMA, and then TP2 would be the white line, which is the Mayo, which is the 200 EMA. Hey, can you take them in the other room? Sorry, guys. Um, but yeah, so either way, you would have gotten some pips, right? And as you can see, the setup is pretty simple. Right here would have been like about 20, 25 pips, and here would have been 60 pips, which is plenty of pips. Like, you can live off of that, you know? Um, so, give me one second here. So this right here, can anybody tell me what type of setup was this? Was it a type 1, type 2, or type 3 from yesterday? There you go. That was a type 1. Yep, it was definitely top 1. And then if you want to, and sometimes you may not see the setup correctly at the 15-minute. So you might want to go down to the 5-minute just to kind of see a little bit better, right? So if you go down to the 5-minute, you'll see the setup a lot clearer, right? And then you go down to the line chart. I mean, yeah, it looks like a V, but it's still a type 1 setup, right? And right here, you see the candlestick pattern. This is a morning star. So this would have been a perfect entry. And then another thing too with the EMAs, whenever you see the EMAs contracting, like they're all squished up like this, all in the same area. First thing that tells you is that there's some type of consolidation going on, right? There's some type of accumulation going on. That means that there's going to be an impulsive move, and that's exactly what we got. So whenever you see all your EMAs in the same area, just expect a move like that. You just got to know where, what direction they're going to go, and you know if you know your candlestick patterns, and you know where you're at in the cycle, you can basically know which way it's going to go. All right. Anybody got any questions about that?
Hey, bro. What's the types again?
So the types, you got a type 1, a type 2, type 3. All right. So here, let me show you real quick. All right. So right here. So when you're looking at a bullish setup, this is a type 1. So basically, price can start from the 50% of the Asian,
Hmm.
and it'll give you that impulsive move to entice sellers. Right? I can't. Can you guys hear? I can hear an echo. That's why I'm asking.
Yeah, I can hear you.
Okay. So basically, it'll give you yeah. I hear an echo. All right. Cool. All right. So let's do this. Um. All right. So basically, price will start from the 50% EM, the 50% of the Asian range, and it'll break out to basically entice those breakouts, breakout, traders. So they're going to think that the price is coming down, so they're going to hop on the sells, right? And then it'll come back up and then go back down again, making them think that they're still in it, and it'll just take off. So this is type 1. Type 1 basically it'll give you the setup below the Asian range. As you can see, this is the Asian range. This is the 50% of the Asian, right? And then it'll give you the setup below the Asian range. So same here. It could start from here. It could start from the bottom, right? And also, it doesn't always have to be a W. It could be a V. just like how we just saw with the example that we just showed, right? And then you got your type two. Your type two, you will get your setup at the Asian low, right? So you can get your W forming from it can start from in from inside of the Asian range and it finishes right at London, or you can have them the first leg being in the Asian and the second leg will be in London, or you could just have it forming right outside or right after the Asian range, right? And and also like right here. So this is the candlestick pattern. This is the railroad. The railroad track that will be your indicator for you know for that move for that second leg, right? So technically, if you look at this, it might look like I mean it looks like a V because the first leg was initially in the Asian range, and then the second leg right here, and then whenever you see a railroad track, that will be an indicator to get up, to get on that bar. All right, and then you got your type three. Now your type three it forms in the 50% of the Asian range. As you can see, it could start in from the Asian range, and then the second leg would be in the beginning of London, or like this, or it could just form outside of the Asian range. All right, and and another one of those type threes is that you might have price breakout from the top of the Asian range and then come back down to the 50%, right? And then give you that confirmation to hop on that buy. All right. So the key is to not basically master every single type, because I mean I know it's a lot. They're pretty similar, but what I would recommend is like basically, if you find a type that you're more comfortable with, then just trade that type, and that's when backtesting comes in handy. You can backtest your pairs. Find a pair that'll give you, like for instance, if you like type one setups, find you that one pair that's going to give you the most type one setups, and then backtest it, master it, and then just wait for the setup when it happens. You may not get the setup every day, but at least you'll know it when you see it. Does that make sense? I guess that's yeah, right? All right, cool.
Yeah, my fault. I'm driving.
No, no, you good. All right, so anybody else got any questions? So you guys know your types: type one, type two, and type three. All right, cool. Well, then we're gonna go with that then. Is the market maker for the Asian types are available? Um, yes, they are available in the back office. So if you go in the back office, just go into the Epic University and then find the section where it says Market Maker Method. And then when you click on the first video, right below it, you'll see all the PDF files that you could download to kind of help you identify these setups. All right, and then make sure that you watch every single video that JoJo puts out, because he'll make sure that you understand everything. All right, cool. Oh, you use it on Nas 100? Yeah, it work. It works on everything. It works on everything. I was actually looking at Nas 100 today. It was pretty smooth. Yeah, it was pretty smooth. Yeah. See, you see this first leg right here, the second leg. You got your confirmation right here. So I mean, you could have been safe with it and then wait until you get that 5 and the 13 cross and then hop on it right there. Oh, you caught the buy and the sell. All right, cool. Hey, that's what's up. I'm gonna send you a message. I'm gonna send you my cash app. All right. Alrighty. So yeah, it obviously works on everything. And another one of those currencies that I found out that it works on perfectly too is actually gold. Um, so obviously gold, it works nice. Like I was looking at it because I don't trade a lot of gold. Um, so I was just back testing it, and especially today, it gave us a nice setup during New York session. As you guys can see, When it came out, it gave us that that stop hunt, right? Entice some people. So technically, you could have caught that buy going up. But then again, when New York started, it gave that beautiful M formation. First leg right here. Second leg, it gave you an evening star. This would have been your entry point right here. You would have entered right there. Caught it all the way down, right? Let me see how many pips that is. So technically, from here all the way down, that's about 170 pips. You know, that's a nice little payday, all right? All right. So I don't know what just happened. Whoa, what did I just do? There you go. Y'all didn't see that. Um, but anyway, another one of those setups was from Wednesday, right? So on Wednesday, um, it looks like so basically what the move that I saw was this one right here, because with the EMAs, everything was contracting, and then it looks like this is the first leg right here, and it went down and went up, gave you the second leg right here, right? And then you got your crosses, you got your prices below, price close below the 200 and the 50, and then you got the 5 and the 13 crossing at the same time. That's a dead giveaway, right? So you could have rolled that through, you could have rolled that all the way down. So it works on everything. It works on indices. It works on, you know, it works on regular pairs. It works on gold, silver. It doesn't matter, right? So, so basically, what I wanted to do too is I wanted to do some back testing today. So basically, just pick a random pair and then just go back to a random date and then just back test it and look at it, see if we can identify the setups, and then see what we would have done if we were looking at it at the time, right? So, um, what pairs? What do I got? All right, EJ. Okay. All right. So we're gonna go with GJ, even though I don't like GJ right now, but we're gonna do it anyway. And because Trish said it too. All right, cool. So let's do this. So I'm gonna go ahead and I'm gonna just go to I'm gonna just go to a random day, right? I don't know how far back. So I usually like to start on Mondays because that's the beginning of the week, right? So I'm gonna go ahead and do this with the replay. Usually just start at the Asian range, right? And then this is what I would do. I would just play it and look at the candlestick pattern, right? So right here, I see the price is breaking down, right? So automatically, I'm looking for a type one setup because that's basically what happens with the top one setups is when price breaks down below the Asian range, that's when you get your setup. So automatically, I'm thinking about type one, right? So I'm looking at the price. I see that that could potentially be leg one. That right there could be, leg two. Price is going down. Okay, it continued to go down. It's running away from me, right? And then now we'll see. So now at this point, what time is it? Is that 5:30? So we kind of missed that window for that London session. So right now I'll be looking for a setup during Asia, during New York, right? So since we didn't get our setup, so this right here, I wouldn't in particularly consider that as leg one. I could count this as the stop hunt, right? First move, second, and third, right? So this can potentially be my leg one. So I'm just gonna wait and see what price is gonna do, right? So price went back up, and then looks like it might be coming back down, and it didn't, right? So now looking back at it, this could potentially be a setup actually to hop on that buy, right? Because with the V's, so remember what I said earlier with the top one setups, when there's a V or an A, you can basically jump on that setup just based on your candlestick pattern, right? So you would have, if you have a candlestick, if you have a railroad track or a cord of wood, that's an indicator for you to jump on that, setup, even if you didn't get the second leg, right? So right here, can anybody tell me what setup, what candlestick pattern am I getting right there? There you go, right here. We got cord of wood. Exactly. So that's our cord of wood, and on top of that, it's sitting right at 800 EMA, which means that it's going to be revert, like most likely it will be reversing, right? So let's go back to here, and then we're looking at the candles. So right there we got our cord of wood, right? And so technically you could basically jump on that, jump on that buy, but I would like to get some more confirmations. Like for instance, if I see a reversal and I see the 5 and the 13 crossing, that tells you that there's a reversal coming out, right? So I would look at the next candle. So right there, me knowing me, I would have jumped on it right away, like right here. But technically, you should be waiting till you get that cross, which is gonna happen like right here. So right here would be a nice place to get in, right? Because you got the 5 and the 13 crossing. That's telling you that there's a reversal. You got your quarter wood sitting on the 800 EMA, and then if you look at the TDI, if you look at the TDI, you see that the price line is out of the water and then came back in. So that tells you that there's a reversal, and it already crossed the signal line, which is the red line, and now it's crossing the baseline. So this is a lot of confirmations for you to jump on that buy, right? So typically, when you get on these setups, you would go for the stop loss is always going to be below the lows. So this right here would have been like, it would have been a deep stop loss. I wouldn't even like that. But you always want to do at least a 1-to-1 ratio, right? To make it make sense. So 36 pips, so I would go like 60 pips. Um, and then let's see what it does. As you can see, that hit TP. All right, so you would have won that trade. You would have got what, about 60 something pips, and if you were holding it, you would have gotten about 80 pips. All right, does that make sense? All right, cool. So now let's keep looking and see what New York gives us. So here you already got your 80 pips or whatever. So you're gonna wait and see what New York will give you. All right. So right now, so this can potentially be your leg one, right? And this can be your leg two, right? So with your leg two, this is another candlestick pattern, isn't it? Can anybody tell me what this pattern is? Anybody? Anybody? Okay. Evening star. Yeah, I mean it could technically pass for evening star, but I was looking at that engulfing, that bearish engulfing, right? I'm looking at a bearish engulfing, so you could potentially get on that sell. So let's see how far back down it goes, or is it gonna hit our stop loss, right? Let's see. All right, so I mean it went down, um, with the 40 pips, which is not bad, right? Considering that your stop loss is gonna be right above here, right? So 40 pips. You would have caught 60 to 80 pips, 40 pips, like 60 to 80 pips during New York, London, and then about 40 pips during New York, right? Can't beat that. Call it a day. Wait till the next day, right? This is all just one pair, right? And now let's just see what next day is gonna do. I don't care what happens during this time. Right now it's not doing anything anyway because as soon as you get that set up in New York, you're done because there's not going to be a whole lot of movements after that until the end of the day. So now let's see what it does next day. So first thing that I'm looking at is the average the average for the Asian range, which is 17 pips, which is great because if I see that I know that the likelihood of me getting a setup is pretty high, right? So let's play it out and see. Again, it broke down. So now I'm looking for a type one setup also, right? So it's going down. All right. Still not seeing a whole lot. So that could potentially be a leg one. So looking at that, can anybody see anything that would make them want to get on that this setup right here? Do you guys see anything on here that would tell you, hey, this is safe. Go ahead and jump on it. Come on, guys. I can't be the only one talking. There you go. There you go. Not so clear. Okay. I don't know what means, but okay. Yep. So the red line. So right here, it crossed the red line, and then it's crossing the yellow line. So that's telling you that it's going up, and also the 5 and the 13 exactly. 5 and the 13 crossed right here, and you got your morning star. But you might say, hey, but I thought that the only candlestick pattern that you could jump on with just one leg is the quarter wood or the railroad, right? But if you go on the line chart, you can kind of see that this is technically your second leg or your third leg actually, right? Got one, two, three, and another confirmation too is that this can be like an inverted head and shoulder, right? So I like this setup. You know what I mean? So let's just see how far it goes. So as soon as we see that 15 and the 5 cross and all the other confirmations that I just named out, and you got your candlestick pattern right here, I'm comfortable getting on this trade. Right, right here. Stop loss is right below the lows, and then at least 2 to 1. Let's just put it somewhere around here, just to see what it does. Right, and then let's see what it does. Okay, so this one took a while. So me personally, if I would have gotten in on that trade, and let's see how long it took from the time that I jumped on it until now. So this is about 3 4 hours. Me, I would have jumped out. I would have gotten out. I would have took my profit and got out. Right, because with the market maker setup, whenever they give you a setup, they're not waiting around because they already grabbed whatever they needed to grab. They already enticed enough people. They trapped enough people, so they don't have time to be waiting around. If they're waiting around, if they spend about 2 3 hours just hanging around, it's either they don't have enough orders to fill, or they didn't trap basically enough people for them to take off, right? So what I would be looking for is for New York to continue that pattern, right? So I'm looking for New York to actually take it up to continue this pattern. So the objective of New York session is basically they're gonna either continue the pattern that London's created, or they're gonna correct it, or they're gonna reverse it. It's one of those three. All right. So just for the simple fact that London gave you the confirmation to get on that buy, but didn't really take off. It just hung around. That is going to make me think, okay, okay, maybe it's going to be either reversing or it's going to be continuing in New York, right? And again, we see that the EMA is crossed again right here, which is telling you that it's going down. But with the EMAs are a little bit late. So this, I would say that this EMA is because of this move that already happened, right? So we're gonna wait it out and see what we get, right? So so right here, does anybody see anything? What would you do if you were looking at the chart and it looks like this? Are you getting any confirmations? Are you waiting around? Are you taking it? There you go. Yeah, you got equal lows. Equal lows. Yep, I would wait. So I'm still waiting on confirmation right now. Right? We got equal lows, which is, could be a double bottom, it could take off. And another thing that I'm also seeing here is that they're still respecting the lows that they created in London, which means that they don't want to release those people that they've already trapped at this point, right? Because there's a bunch of people that are in drawdown at this point. All these people that jumped on it for a sell, they're in drawdown. So they're waiting for price to come back down to profit to at least their entry point so they can get out. They're trapped, right? It's a lot of liquidity. So basically, I'm gonna wait and see what price does. Right. So right here, I ain't gonna lie, I would have hopped on that buy. I ain't gonna lie, man. Like right here, if I see that right there, I mean, well, actually, nah. This is never mind. Never mind. Don't worry about me. I'm looking at colors different. I'm thinking this is red and this is blue. Don't worry about me, y'all. Don't worry about me. So this right here would actually tell me that it looks like a railroad track, right? But it's bearish. It's not bullish. And right now, my bias is a buy. So I'm looking. Right. So right here, I'm getting confirmation. So technically, I can look at this as being my first leg, and then this as being my second leg. So just like that, I changed my bias. Maybe New York's objective was to reverse, but as you can see, what time it is? It's 11:30. If New York was going to do something, they would have done it already, right? So at this point, it's 11:30, almost 12 o'clock. I'm not even jumping on. I'm not even doing anything. I'm not even trading this pair this day. I'm not saying that it won't do anything. I'm just saying that I won't be trading after 12 o'clock because if New York was going to do something, they would have already done it, right? So I'm not even going to take the risk. I'm just going to chill. And as you guys can see, it didn't really do a whole lot until the end of the day, right? It didn't do anything, right? So if you would have hopped on, like let's say you saw that right there, right, and then you hopped on the sell, right? You'll be in profit for a little bit, and then you'll be in drawdown. So you'll be hanging around your entry point. Or even if you would have jumped in right here, 2 or 3 candles after the confirmation, which is pretty typical because you're not gonna catch it right away. Let's just say you caught it right here and then you jumped on it right here, right? You would end the day in the negative. You're in drawdown. The whole time you entered, you're in drawdown, right? So that's why I said I'm not even gonna try to jump on any trade because it's 12 o'clock. New York is not gonna do a whole lot. All right. So let's look at the next day. All right. So we got Asian. All right. Yeah, we got Asian. Okay. So what type would you be looking for just based on this candlestick pattern that comes out of the Asian? Anybody? No. Okay. That's cool. So right now we could potentially be getting a type two bearish, maybe. Yeah, type two bearish, just based on what I'm seeing here. Okay, so type two bearish. So right now I'm about to get some confirmation. So let's see what it does. All right, so the 5 and 13 crossed, and next candle was bearish. I mean bullish. All right, so we're still watching it. We're still watching it. So it's not doing a whole lot at this point, right? So this is just another day. I mean, just like the day before, it didn't really do a whole lot. So at this point, if I'm looking at the chart and I'm seeing that Asian did what it did, right? It did what it always does, accumulate. You know, it just going up and down. And then New York I mean London comes and does the same thing. I see the pins to the mail, so that might be a confirmation for a sell. But basically, what I was saying is that when Asian is ranging like this, the objective of London is the fake out move, and then New York corrects it or whatever. You guys already know the pattern, right? But if London comes out and they're doing exactly the same as what Asian did, that means that Asian didn't really accumulate that many orders, so they still need more money. So they're going to continue what Asian did, and then let New York do what it needs to do, right? So right now they're doing exactly what Asian did, so it's just ranging, it's going up and down. So in my mind, if I'm looking at this, I'd be looking at some type of setup in New York, right? Because London didn't give me nothing. I'm assuming that they're going to get enough orders for me to do my job, right? So let's see what London does. I mean New York, all right? So still not seeing anything. Still not seeing anything. All right. So right now I got the 5 and the 13 crossing, and I see that it broke the 50 EMA and the 200 EMA. Right. I'm not ready to jump on anything though. I'm just gonna see what it does. All right. So right there. Okay. So these wicks right here is telling me that there's some type of resistance, right? And I mean, it makes sense because it's literally sitting at the 200 EMA. There's gonna be some type of resistance. So right now I'm still looking for a setup for me to jump on that buy. I still don't have enough yet, right? And as you can see, it reverses back down. So that was a bad day. So we had 2 days in a row where we didn't do anything. It was nothing but ranging, right? So, and this basically, brings me to, you don't have to be married to one pair, right? Like, let's say you was looking at GJ. Let's just say GJ is your favorite pair, and that's the only pair that you trade. This is 2 days that you missed out on trades. This is literally 2 days that you missed out on money because you're loyal to your pair. Not saying that you can't have a favorite pair, but be flexible with it. Don't just look at one pair every day. Yeah, have your main one, but make sure that you have multiple pairs that you look at, right? And that's something that I had to learn because everybody knows I only traded GU. Like GU is literally the only pair that I traded, but I lost I lost some trades that I didn't need to lose because I was forcing trades when it wasn't really there, you know. So if GU is not giving me what I need to see, I'm gonna move on to another pair. I'm gonna go to NZD USD or whatever, you know. And basically, what I ended up doing is I was just picking random. That's why I have so many pairs on here. I would just click on random pairs and then just backtest them, just like how we just did. Backtest it just like how we did, and then you kind of know what it does before it even does it because they're these pairs are pretty. They have their own patterns. They usually repeat themselves, right? And what I came to find out is this pair in particular, Cat Chef, it was just random. I just picked it one day and I just started back testing it like we just did. And this is a trade that we actually took. We actually took today. I think we got like 30 pips, didn't we? Something like that. It was like 30 pips. But anyway, you guys see this beautiful M that it formed, right? See, it gave you that move, so you could have potentially got caught that buy, right? Yeah, you got the pins to the mayo, and you got your 5 and the 13 crossing, right? And TDI confirmation. So all these pins right here, it was a buy. But this is the trade that I actually took because I was waiting on that setup. Even though it was after New York, technically, I don't be looking for setups after New York, but I was already watching this right from the beginning, from earlier this morning, and I was just waiting because it went up and I seen that it passed the ADR for the day, which means that the reversal is imminent, right? So here you got your railroad, right? So jump on that sell right there, right? And then your stop loss, you wouldn't even be risking a whole lot. You're literally risking only 4 pips because you put your stop loss right above the high of the day. right? TP, wherever, right? And and then this right here, you could have literally had one entry in, and then when you see that retracement, don't panic. Don't think that it's coming back down to take you out. Just put another entry in, right? Yes. So when it passes the ADR, it's almost certain that they're gonna either come back and then fill that void, or they're gonna come back. Now, how far down they're gonna come back, no one knows, but a reversal is imminent. Like usually when they exceed the ADR for the day, they usually end the day inside of the ADR. They usually come back inside. So whenever you see a setup and you see that the price is above the ADR, I'd be looking for a setup for it to come back in, right? So you could have looked at this two different ways. You could have looked at it as an A with just one, the railroad track right here. You would have hopped in, and then when it retraces, you could put a second entry in because you're pretty confident in this analysis, right? There's nothing telling you, like when it did this right here. There's nothing that's telling you that it's going to be going up. Like there's literally no confirmation. So if you see that and then you see that pin, get in another entry. Don't be scared. I'm not saying do that every time, but but you could literally have two entries in with the same amount of pips. So this is 40 pips. You would have gotten 80 pips. Um, and get liquidity that they left. Yeah. Um, Hold on, you say got it. It is because they have to. Yep, that's exactly. Well, so as far as ADR goes, they're only allowed to basically move a certain pair, a certain amount of pips a day, right? So let's just say they're only allowed to move it 80 pips. If they move it 100 pips, then you know that they're gonna have to come back, at least give you 20 pips back. You get what I'm saying? So if they move 100 pips and we're supposed to do 80 pips, they would have to come back in. Doesn't always happen. So don't just base it on that. Don't just say, okay, this is it. Then that means they're going to do it. Because some days they don't really care because they have until the end of the week. So sometimes, so it's just like how they have an ADR for the day. They have an ADR for the week too. They have a specific amount of pips that they have to move during the week. So if they don't fill it one day, they can come back the next day and fill it, right? All right. So as far as the indicators go, fake out Fridays. There you go. Fake out every day, actually. All right, so I'll show the indicators here when I'm done. Okay. So I was just trying to go back to, like, just a few days. You know what I mean? So this is becoming one of my favorite pairs. This is one of the pairs that I'll be looking at every day. I never really looked at Cat Chef until now, and as you guys can see, it's literally giving you beautiful setups every day. Y'all see that beautiful M right there, right? Even right here, you could have literally hopped on that buy, right? You got your Morning Star, you got your EMAs, 5 and 13 crossing, price closing above the 50. You could have took your TP right here, or you could have waited until it closes above it and then take it. And you could literally ride it until whenever price closes below the yellow line. That would be exit point, right? So that's a beautiful M. Same thing. Day before that, right? He gave you a nice M2, right? And you got your EMAs crossing. TDI, same here. Shark fin out the water, came back in, crossed the yellow line. I mean the red line, right? So this is easy, y'all. Like this is like super easy, and I might see them a lot easier, a lot faster than y'all because I look at it every day, and that's what you gotta do. You just gotta train your eyes. You just gotta train your eyes. You gotta look at the pairs. You gotta back test it like how we just did, and learn how they move. So that way you know how to know. That way you know how they move before they even do it, right? Does anybody have any questions? Look at this M, y'all. Look at this. Look at this. Man, y'all see this? Every day, it's giving you a setup, a couple of setups. You got your W forming right here. You got your M. You could have potentially took it from here, whatever, and then you could have literally seen this W forming too. Crossed right here, took it all the way up. All right. Same here. M. First leg of the M, down, went up. You could have potentially entered anywhere in here, especially with these wicks to the top. That's another indicator that price is rejecting from somewhere over here, right? See, it's coming back down. All right. So again, see this right here? See that M right there? Beautiful. I can keep going, y'all. Like I can keep going. All right. So let's see. All right. So somebody asked what indicators I'm using. So I'm gonna show you guys the indicators that I use. All right. So for the Asian range, so basically all the indicators that I use is when you go to your indicators, what you want to type in is FXN, right? FXN, and then just put all these three in there. This one, the Asian range, the weekend day separator, buy sell signal, 5 and a 13 EMA. All right. Okay. So when you do that, so the Asian range one, this is the one that's gonna fill out the Asian range in New York and whatnot. All right. So this is my setup. I don't know if anybody needs to, take a screenshot of it or whatever. I don't know. But yeah, this is what I use for that one. All right. And then the week and day separator. This is basically to give me, to separate the days, and I just like to see what days I'm in on the chart. I don't really need it, but I like it, right? And you can basically put a separator for, the weekly separator, so that way you know where your week starts when you're doing your back test or whatever, right? and and then the third one is this one, the buy sell signal. This one is great. So this one would actually automatically give you all the EMAs on there. It'll give you the 800, 200, the 50, 13, and the 5. It'll give you the 365 too, but you don't really need that, so you just uncheck it, right? You don't really need the 365. All right. And another thing that I like about this indicator in particular, the buy sell signal, is whenever the 5 and the 13 cross, you get that little yellow dot. Y'all seen that yellow dot or that orange dot? Every time the 5 and the 13 crosses, it'll give you that indicator like, hey, there's an opportunity for you to hop on the sell or buy, right? And then this, you just got to go back in the settings, and if you want to change it or whatnot, I'm sure you'll figure it out. But it's this indicator in particular, FXN buy sell. All right. So just make sure that you type in FXN and then just add all three of these. All right. And then, so as far as the TDI goes, um, where is it at? The TDI, you want to use, it doesn't really matter which one you use. I like to use this one. Um, yep. So, the TDI, that's the one that you use. Thanks to Tasha. All right. Um, and then also another indicator that I like to use is my ADR high low, which is this one. So you go to indicators and then you type in average daily range high low, which is this one right here. Average daily range high low. All right. And this one will show you the daily range for each pair when you own it. All right. All right. So you want to look at Cat Chef. Oh, okay. I'm slow, yo. I'm just seeing that. Thank you, Tasha. Thank you, Tasha. Yeah, Cat Chef about to be. Yeah, she's about to be. She might take GU spot now. I don't know. Nah, I don't think that anybody can take GU spot. GU is still number one, but Cat Shift can take the second place though. All right, so again, utilize your back test, yo. Like if you can do this, like this you would learn so much you don't even understand, right? You won't even understand because you're literally training your eyes because like you're not seeing what's happening. Yeah, you might see it before you do this, but like you can just train your eyes, right? You know, there go your V. All right. So let me look at the chat real quick because I feel like I haven't been looking. All right, so somebody so CHF JPY. Where is it at? This is the only drawback though. Like if you have that many pairs, it's gonna be hard for you to find them. Like I'm over here looking for a pair. I don't even know where it's at. All right, we're gonna do it this way. Hold on. CHF JPY. I thought I had it on there. I guess not.
You can search in the at the top. You can do a search. Yeah.
CHF JPY. So, ooh, oh my goodness, how did we miss that? Okay.
I know, right?
That's beautiful, y'all. How many pips is that? It's only about 30 pips. It looked like it was more than that. If that was GU, I bet you it'd been like 100 pips.
What do you mean? What do you mean only 30 pips? That's all you need.
Oh, okay, you're right. You're right. Let me stop. You're right. Wow, that's a lot of pips, yo. That's a whole 30 pips, y'all. Oh my goodness. It's a lot you could do with 30 pips. Don't listen to me. To Wanda, no, I don't use the 80 MA. The only MAs again like I use is the 5, the 13, 500, 50. To wait, I'm tripping. Wait, let's try this again. The 5, the 13, the 50, 200, and 800. That's it. All right. Okay, so let's see. So with the CHF JPY, this was ugly today. Like this was ugly. It was doing a whole lot. It didn't really do nothing. I mean, if you were looking at it right now, you would see that it crossed. I mean, obviously we missed that move, but if you were looking at it, you would see that 513 crossing, and with the TDI, I mean, it crossed the red signal line, which tells you that there's a reversal. It went past the yellow line, but when if you were going to jump on it, you would be seeing it, heading towards the red line. So this is, a heavy bullish move right now. I don't know if I would jump on it now because you already missed the move. But if you were looking at it at that point when that happened, then that would be the move. 5, 13, 50, 200, 800. There you go. Yep. 5, 13, 50, 200, and 800. But like I said, to make it easy on you, if you put this indicator in, the FXN buy sell signal, this one, FXN buy sell signal, it'll automatically have those EMAs on there for you. 800, 200, 50, 13, and 5. And if that wasn't cute enough, it still gives you that indicator that the 5 and the 13 are crossing. You know? So there you go. All right. So for yesterday, I mean, one second, guys. Okay. So for yesterday, it looks like what type did it give us? What type was this? Let me see if y'all paying attention. What type is this? Was this type 1, type 2, type 3, type 20? Come on now. There you go. Type 1. Okay, type one. I actually thought it was type. I would actually say it's type two because it didn't actually break the Asian. If it broke the Asian and then formed an M, I would say it's type one. But just for the simple fact that it actually went up, it already created Asian high, went down, went up, it retested the Asian high, and then gave you a confirmation. That will be type one. I mean type two, right? Let me go ahead. Hold on, let me find it real quick. Uh, did I say two? Oh, my bad. Well, there you go. You said type two. Okay, I'll give you that. Good job, Savvy. Good job. All right, so yeah, I would say it's type two, right? Y'all agree with me? It looks pretty identical, right? So yeah, so that would be type two, and obviously your confirmations is, let's see. All right, so we got the cross here. So technically, I would have hopped on right there. Let's see how many pips that is. Probably like 12 or 13, maybe not. Oh, that was 30 pips. Okay. And again, TP1, the water, TP2 is the mayo, right? So another little tidbit, I guess, is whenever you have a setup and then you see that the EMAs are super close to where the price is at. I mean, I know we all want to catch 50, 60, 100 pips or whatnot, but the safer route is to take your TP1 at the water and your TP2 at the mayo. TP1 at 50, TP2 at 200. All right. Okay. All right. Cool. So TP1 water, TP2 mayo. All right. Does that make sense? And also you got your pins to the mayo. That's another entry. That's another entry complement. So if you see price bounce, so if you see the second leg forming at the mayo, that's almost like a sure bet. You know what I mean? Like nothing is a sure bet, but this is like close to it. If you see pins to the mayo, that's a go. That's go time. You see pins to the mayo, and it's the second leg of the W or the M. Yeah, go ahead and jump on that. Most likely that's gonna go your way, right? Obviously, you get your confluences or whatnot, but that's like the strongest confluence. All right. Oh wow, it's already 8:05. Jeez, time went by fast, y'all. All right, so anybody got any other questions? No questions. No questions, y'all. Okay. All right. Cool. Well, if that's that, then I guess we'll go ahead and end it. So basically, what I wanted to do. So let me go ahead and stop recording it because we're done with this session. Thank you guys for hopping on and making this fun. All right. Cool. Thank you. Thank you. Uh, how do you stop recording this, y'all? I need help.